Hey, Jonathan York from Bay Financial Partners, looking at investment markets. Really, all eyes in the US markets are really on the Fed meeting next week. Now, certainly after the recent data, it's going to be a very tough call for the Fed because the latest employment data was actually a little bit stronger. And obviously, when you look at that in conjunction with the CPI data and inflation, that it's still running at sort of 2.7 to 2.8%, if not a little bit higher. So it really will be a very tough call for the Fed. And just on the inflation front, I mean, it's quite interesting because Trump and the administration, more Trump himself, keeps on saying that, prices are down on everything. Most noticeably gasoline, still claiming that gasoline prices in the US are close to $2, whereas the average is around sort of $3. And certainly what is quite interesting is that interest rates have started to nudge up in the US now. That 10-year is back at 409. The 2-year is 353. And that 30-year is back up at 474. That's around a sort of 10-15 basis point increase on the 30-year and around a 10 basis point increase on the 10-year. Now that would appear to imply that the markets don't feel that the Fed is going to cut in December. So will we see a Santa rally going into year end? Now we've got another special election as well in a key red state, which will be very interesting to see how it plays out, as it's looking like a possibility of that state could be flipped. That's really against a backdrop of Trump's approval ratings really falling to record lows. Again, despite his claims that he is seeing record polling numbers. Trump has been releasing more presidential pardons as well, and really the scope and the people that he's pardoning, sort of fraudsters and drug people, is really raising some questions. Though it appears his standard answer is that he didn't really know the people and it was a Biden conviction. Now, obviously, still got no end to the Ukraine-Russia war. Indeed, Russia is still bombing Ukraine almost on a daily basis. Despite apparently talks taking place. Which really does beg the question about, the conviction of Putin to try and end this war. For all the talk about trying to find a peaceful solution to the Russia-Ukraine war, there seems very little action taking place at present. Now oil will come back a little bit, it's just below $59 at 58.90 and change. Now in the UK, for all the talk about the budget, the markets seem to have taken it reasonably well. Certainly the pound hasn't weakened aggressively, and also gilt yields have come down as well. So despite the tax increases and the various other sort of cuts out there, it appears to be sort of reasonably well received by the markets, which is always a good sign. Instead of that Russia-Ukraine war is really at the forefront of the EU sort of scene at present, really trying to get some sort of peaceful solution But at present, Putin really seems unwilling to move on anything. He wants all the land that he's sort of occupied so far. Now, in Australia, moving to a monthly CPI release now. The latest release, again, with potential, was a little bit of a stumbling block for the Reserve Bank to be cutting interest rates, as it didn't really show much reduction. Now, here in New Zealand, we've got the new Reserve Bank governor taking up the role, Anna Brahmer. And that's going to be interesting to see how it plays out. The next meeting isn't until February. But obviously with the OCR being cut pretty aggressively over the last couple of months, down to 2.25. You would hope that those cuts will start to be filtering through into the economy now. Indeed, around 40% of mortgages will get reset in the next sort of 6 months. And certainly they will be reset at much lower levels. But there certainly are signs that there's a little bit more confidence coming into the economy. Certainly business confidence is up. Consumer confidence is moving up a little bit. The housing market is certainly moving. And there are obviously all positive signs that the economy is starting to move in the right direction. I suppose the big question is, will there be enough signs by the time the Reserve Bank meet again in February that they don't need any further rate cuts? Now, obviously, as well, there's less than 12 months until the next election as well. So it's just going to be very interesting on the political front as we get into 2026 to see what sort of policies come through. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.